Assalamu alaikum, dear student. Let us start the second last topic of the revision, that is IR 35. After that, inshallah, we'll discuss what are the changes in capital allowances relating to corporation tax only, not individual, only in corporation tax. What are the changes in calculating personal allowance, capital allowance. Now, let us discuss the second last concept of corporation tax, that is personal service company. Sometimes it is called IR 35 as well. Now, what is this personal service? If an individual incorporates a company, for example, Mr. X has incorporated, let's say, X Limited. Okay. Now, what is happening? Let's say there's Y Limited, the client. For example, Y Limited needs services from X Limited, and X Limited sends Mr. X for providing services, and Mr. X is the only employee of X Limited. That's it. So it means Mr. X has incorporated X Limited and Y Limited is a client who needs, let's say, services from X Limited. And how does X Limited is providing services? By sending Mr. X. So whenever client needs services from X Limited, then X Limited sends Mr. X only, because he's the only employee in the entire organization. In such scenario, IR 35 applies, and whatever basically X Limited is getting from Y Limited, the entire amount is treated as deemed salary of Mr. X. If an individual incorporates a company independently and starts providing services in his personal capacity, this is called personal service company. If HMRC identifies that in the absence of incorporation, individual is being provided services as an employee does, then the whole receipt of the company will be treated as deemed salary for the individual from related client. What is the format of calculating deemed salary? The deemed salary will be calculated. The total receipt of the company, whatever, for example, X Limited has received, less statutory deduction, which is 5% of the receipts, less actual salary paid by the company, less class 1 employer NIC paid, less if we have any allowable expenses. Then we get deemed salary including NIC. Class 1 employer NIC upon deemed salary. We'll take this deemed salary, multiply by 13.8 divided by 113.8. After deducting this class 1 employer NIC upon the deemed salary, you will get deemed salary liable to income tax. Dearest ATX student, you need to remember this format of IR 35, because if you really, if you can remember this format, then around 4 to 5 marks can be earned just having the grip only on this format. Let us see a question where we can apply IR 35. Okay. Calculate Zach's taxable income for the tax year 22-23. We just need to calculate taxable income for Zach. If personal service company IR 35 legislation were to apply to the fee income received by Yo-Yo Limited, 5 marks. Just you need to calculate taxable income. Zach is a sole shareholder, director and employee of Yo-Yo Limited, a company which provides consultancy services. In the year ended this 31st March 2023, Yo-Yo Limited gross fee income from the relevant engagement performed by Zach will be 1,10,000. In the tax year 22-23, Zach will draw a salary of 24,000 and dividend of 50,000 from Yo-Yo Limited. Neither Yo-Yo Limited nor Zach has any other source of income. We just need to calculate taxable income of Zach. So let's calculate. We are solving part C of this question. Zach's taxable income for the tax year 22-23. Yes. Whatever Yo-Yo Limited is getting, the first step is You have to take the fee. Total receipt of the company. Total receipt of the company. Total receipt by Yo-Yo Limited. That is 1,10,000. Let us deduct 5% statutory deduction. Statutory deduction, which is 5%. If we take 5% of 1,10,000, we will get 5,500. 1,10,000 minus 5,500, I'm getting 1,04,500. Salary for Zach is 24,000. Class 1 employer NIC on this salary. Class 1 employers NIC. 24,000 minus 8840, because still 8840 NIC rate is 0%. After that it is 13.8. And this 8840 is per tax year per employee. So 24,000 minus 8840, the difference we'll apply 13.8. If we apply 13.8 on the difference of 24 minus 8840, I'm getting 2092. So 1,04,500 minus 24,000 minus 2092 gives me 78,408. Now let us deduct employers NIC on deemed payment. Employers NIC on deemed payment. 78,408 into 13.8 upon 3.8. I'm getting 9,508. So here comes the deemed employment income. Deemed employment income. The deemed employment income is, we need to deduct 9,508 from 78,408. I'm getting 68,900. Zach is already getting a salary of 24,000. The additional deemed employment income is 68,900, which means that total income of Zach from Yo-Yo Limited, that will be 24,000 plus 68,900. Obviously, we are not going to consider any dividend payments. Entire 68,900 will be treated as deemed employment income, additional employment income. 24,000 he is already getting. So the total amount is 92,900. Less the personal allowance. In Finance Act 2021, the personal allowance is 12570. Here comes the taxable income. Here comes the taxable income. 92,900 minus 12,570, it gives me 80,330. That is taxable income. So that is simply IR 35, personal service company, when one individual is creating a company and then providing services in his or her personal capacity. In that case, whatever company is receiving from the client, entire amount is treated as deemed employment income of that individual. How do we calculate this? The format. The amount of the dividend which is written in the question, you will ignore that. Obviously, the entire income from Yo-Yo which is available to Zach is 92,900, and entire 92,900 is an employment income. And after deducting Personal allowance of 12,570. Taxable income of Zach is 80,330. So thank you very much for watching this lecture. Assalamu alaikum. Have a nice life.